Good to go.
Hello, everybody. Welcome to the Inspire and Inform episode number 4 on the 24th of June. I'm so excited to have my friend, colleague, my confidant as well, Andrew Colin, who's joining us tonight. Someone I have a lot of respect for in that he's always truthful to himself. He's got a good head and heart on his shoulders, which is great. Andrew, we're just talking to a developer this week, and Andrew certainly knows the questions that we need to ask to ensure that we take on well-researched properties. So, there's no BS around with Andrew, and tonight I'm just excited that he will be presenting and really unpacking the elements of what it would require to be a successful property investor in the Australian, economy. There's not many investors around, and Andrew will kind of go through a little bit of that statistic. And why? Why is it so hard for people to achieve success in the Australian property sector? And then we're going to be unpacking also the two key attributes to building a successful property portfolio. And what I'm really excited about, which I will also have a little bit of a chat about, is the little secret weapon that a lot of property investors utilize to continue to build their property portfolio. So I'm excited to hear that. So let's have Andrew on board. Andrew, welcome.
Yeah, thank you. And the first time Inspire Informs hit YouTube, so we're upgrading and trying to reach out to a few more people. But just building on what Colin was saying in Colin's introduction, just before we came on board tonight, and this sort of flows into what we're going to talk about tonight. But just before coming live, I got a call from a client that I'd been dealing with for a number of years now, to be honest. And I remember when I first met him, he was sharing with me some of the challenges that he was having around, getting his finances in order for his first investment property. And at the time, I sort of shared with him some of the things that I'm going to be talking about tonight, coincidentally. And the one thing, and where this really ties into what it takes to become a successful property investor, at the time, a couple of years ago, he made the commitment, this is what I want. And I'm going to do what I need to do to get myself in a position to be able to take action towards my better future. And it's so rewarding to get a call from him and saying, hey, look, I think since we had that conversation, I stuck with what we spoke about. And now I think I'm in a position to actually do something. And I'm really looking forward to talking to him over the next few weeks. So I guess that's really a great story. And that was literally only a couple of minutes before going live. And it really ties into, what it takes to be a successful investor. He set out his what he wanted to achieve. He knew what action he needed to take, and he simply just took the action. And so that's a really rewarding story for today. But I wanted to sort of, just let me grab that. Yeah, I wanted to talk about, set the scene a little bit and talk about, the context of property investment in Australia. And I guess Australia as a country really has an affinity, a love for property. The Great Australian Dream is very much alive, to buy and own your own home. And I guess there's a little bit of a perception out there that, I think over the last federal election, they were talking about removing negative gearing. And I think there's a bit of a public perception out there that there's a hell of a lot of property investors, every man and his dog, and people taking advantage of negative gearing and all these sorts of things. So I wanted to set the scene a little bit and share with you some data that I got from the ATO and talking about, the percentage of the Australian population that is actually property investors. So the percentage of Australian property investors that own 1 to 2 investment properties outside their family home is 7.4% of the Australian population. Now, it's really up to your perspective whether this is a small or a large number, but where the data really gets a little bit interesting is when we look at the change in that percentage, if we go and look at people that have 4 or more investment properties, and the number really jumps down to 0.32%. So it's a massive gap between the people that own maybe 1 or 2 investment properties outside their family home to 4 or more. And why I really picked that 4 or more is a lot of people that we speak to on a daily basis is really talking about what they see as far as their financial freedom, or what their financial future is, or what sort of income that they want to live on, and use property as the vehicle to get there. For a lot of people, the numbers these days is they're going to need to target 4 or more investment properties. So there's a massive gap between people that get started and people that continue going and get the job done in order to achieve their longer term dreams. And I really think that that begs the question, why is that gap so large? And I guess there's a lot of reasons there. And there's, with so much media hype out there, there's a lot of people think the reasons are very much ingrained in the technicalities of property investing. What's the best LVR? Should I buy a positive cash flow property? Should I buy, I guess, in regional areas, in metro? All the technical details. Is now the right time in the property cycle? And the interesting thing is, from my own personal experience, is whilst these things are important to know and get on top of when you're actually ready to take action, they're not the most important things. The 2 key attributes that I want to talk about tonight begin with building the right team around you. As a property investor, it's very difficult to achieve big goals or big dreams or big aspirations around things like financial freedom, whatever that may mean to you, without having the right team around you, because it's a long and lonesome journey. And just like anything worthwhile in life, there's going to be challenges along the way. Anything worthwhile in life is not easy. And it's when those challenges, hurdles, the coronaviruses, the GFCs, the removal of negative gearing, whatever life throws up at you, and over the course of a 10, 15, 20 plus year property investment journey, you can bet your bottom dollar there's going to be another coronavirus-like thing. There's going to be another challenge that's presented. And where people don't have the right team, they go, oh, well, look, I probably should invest in property. They go out and buy an investment property, maybe in the same suburb that they grew up in or somewhere they're familiar with, or whenever these challenges are actually presented, this is where we find they falter. And I think that's one of the key reasons why there's such a dramatic gap in the number of people that own 1 to 2 properties versus 4 or more properties. So who are the right team that you need to build around you? Well, there's a number of people that you're going to need along your journey. A mortgage broker, yes, sure, you can go and apply for finance directly from a bank. But a mortgage broker is someone that's going to look at your entire situation, not only for today, but where you're looking to get at the future, and put in place the right lending strategy that's going to suit your needs, but also give you the same flexibility to build out your portfolio if that happens to be your aspiration. For example, in my own portfolio at the moment, because I'm in an acquisition or growth phase, I have a lot of my loans and I've been advised by my mortgage broker to put my loans onto interest only. And the reason being is that it allows me to put my cash flow into potentially acquiring more assets in the near future. You're going to need a solicitor or a conveyancer to be able to facilitate your property transactions and make sure that any contracts that you're signing and any properties that you purchase, there's no gremlins in any of the clauses, and make sure the efficient transfer of title happens. You need to find a good solicitor, but not only, but one that specifically focuses on property. And the same is very much true with accountants. I've been blessed across my, I guess, journey in property in helping other people to achieve their goals. I've spoken and done a lot of presentations to accounting groups. And I remember in my very first presentation, I was very, very nervous because I was thinking to myself, my goodness, what could I possibly teach these people that have spent their lives focusing on accounting and money about wealth? And the interesting thing that I discovered along that journey when I did that presentation was that when it comes to personal wealth creation, a lot of accountants out there don't really understand. Their knowledge in that space, that personal wealth space, is very limited. Not saying every accountant, but you really need to focus on building into your team an accountant that specializes in the property space.
Yeah.
The same is true with financial planners. Financial planners historically have been fairly focused around their advice due to, I guess, some restrictions with the way that the licensing works with financial planners around stocks. Again, I'm not saying every single financial plan is the same, but you need to make sure that a lot of their clients, in terms of the insurances that they're recommending to you and the different structures and planning they're putting in place for you, they have a lot of experience in the property space if property is your chosen vehicle towards your wealth. A property strategist, it was very interesting prior to partnering with Colin in terms of Inspire Realty. I went out there in the marketplace because I wanted to transition into the buyer's agent space. And I was very shocked. I didn't really understand the difference between a buyer's agent and a property strategist. And so a buyer's agent, and not all buyer's agents are the same, some do both, but a buyer's agent tends to have a conversation with you. Okay, well, what do you want to buy? Okay, I'll go out and find it for you. And that's very different to a property strategist who's going to be able to sit down, get an understanding of where you're at, where you want to be, and help you put in place a property plan over the long term towards achieving that goal. And the final one, I believe, and it could be any of these people might qualify as a mentor as well. And if they don't, potentially you might need to look elsewhere. But I'm reminded by the saying or the quote from Tony Robbins: if you want to be successful, find someone who has achieved the results you want, copy what they do, and you'll achieve the same results. So when I'm building out, or when I was building out my own property team, I made sure that my mortgage broker, my solicitor, my accountant, my financial planner, and of course my property strategist, all property investors. Because the easiest path towards achieving any goal, as Tony Robbins says, is to find someone that's already done it and follow in their footsteps. So I wasn't interested in recruiting someone to my team that hadn't already achieved what I was looking to achieve myself. Colin, anything you'd like to add to that?
Yeah, I just wanted to say, you mentioned that 7.4% of Australians own 1 to 2 properties outside of their own home. We categorize that as an investment. But when you really think about it, that's a significant portion. That's over 90% of our population that own 1 to 2. So that's already a very small amount. And then you look at 4 or more. But I'm just interested to understand just your very quick take. Why is it so important to have, we're talking about 4, but why is it important to have a portfolio of properties in Australia? Why is that so important, Andrew?
Well, there's a couple of reasons. First reason that comes to mind is around diversification. As we know, and we're well aware in this COVID environment, property markets have cycles. But when we talk about property market cycles, we're not just talking about the Australian property market. We're talking about every market, or there's markets within markets. So New South Wales has its own cycle, Queensland has its own cycle, and each suburb within there. So it adds a little bit of diversification to your portfolio, and basically smooths out the market cycles that you might experience. But the second reason, we'll probably cover that, to be honest, when we go into and speak about, I guess, goal setting and what that actually means. The reason why, but just in short, the reason why is most people might have a family goal, and this is very much an average, and there's lots of variance to this, but might come in and say, hey, look, I want to be able to achieve $100,000 worth of passive income, and that's what financial security means to me. And just on average, I know if we focus on property only, it takes 3 to 4 to 5 properties within your portfolio in order to achieve that. And so that's why I particularly focused on the 4 or more, because those are people that have achieved that sort of goal. And I just wanted to highlight how small that percentage really is.
22%. So it must be very difficult, or rather it's not easy to build that portfolio. I really like your idea of making sure that you have the right team around you. Here is a fun fact. I used to work with Tony Robbins, and he talks all the time about, I mean, if you look at personal training, you want to make sure that if you want to get, if you want to be fit and healthy and build muscle mass, you want to find a personal trainer who's got the results that you want. So it's really, really important for you to really consider the right team around you. So it's just not any mortgage broker. Someone who has, at the very least, understands the importance of building a portfolio of properties, has a few properties, in fact, make sure that they're on your team.
Awesome. Thanks for that, Colin. So moving on, this is where the 4 or more will become a little bit apparent. But one of the second, I guess, biggest factor when it comes to property investment success is beginning with the end in mind. Really knowing what, or another way to say it in simple terms is goal setting. Really understanding why it is that you're setting out on this journey. Because let's be honest, investing in property or doing any type of investment, it's not fun, it's not easy, it's not convenient, and sometimes you need to make sacrifices in order to achieve your goals, and there's an opportunity cost. It's very easy to go and spend your money on a holiday, but if you're going to forego that, well, what is it that you're looking to achieve? Why are you going through all this pain? Why are you holding on to a portfolio for 10, 15, 20 years, however long it takes to achieve your objective, and dealing with all this confusion and the media saying the property market's going to crash by 40%? Why are you going through all this pain? And really need to start with that in the beginning and work backwards as to putting together a plan in order to achieve that objective. And so this is actually an excerpt out of an exercise that we run with our clients, talking about some of the big rocks in the jar. Now you can go, when it comes to goal setting, I find you can go very deep into the minutiae and try and plan out every moment of your life for the next 30 or 40 years. But really what it comes down to is what's going to make you happy. And the answer to that is going to be different for everyone. So I put a couple of examples there: sending kids to private schools, overseas holiday, new cars, charitable donations, obviously covering your living expenses, and assisting parents. And I think when you're doing your goal setting, whatever it is to you, because your goals are obviously going to be completely unique to your personal circumstances, it's very important to align those goals as to how much is this actually going to cost. And I think, Colin, maybe you can expand on that a little bit.
Yeah, I'd like to draw the analogy of visiting a personal trainer. Recently, I visited a personal trainer, And one of the first questions he asked was, what are your goals? What is your objective of coming to me as a personal trainer? Because I don't know, many of you really enjoy going to the gym. I certainly don't like going to the gym. But when you talk about your goals and beginning with the end in mind, you're working towards something. So in this instance, we are asking the question, what are the big rocks that you want to put in your life? What are the major priorities? What are the things that are really important for you to achieve 10 years, 15 years, 20 years down the line? It's very important to know where you want to end up. So that's your point B, say. And so then we work out what your point A, and we're able to then map out, how to from point A to point B, similar to personal training. In fact, I've actually had, I have a couple of injuries when I broke my ACL, PCL, and ACL all together. And that's something I needed to tell my personal trainer. This is the situation that I am. I'm not very fit, and I'm not my fitness. And so then he's able to then put together a bit of a plan for me, a bespoke plan for me, to get me from where I am now to where I really want to be. But he's not able to do that. My personal trainer is not able to do that unless he knows what are my major priorities. What do I ultimately want to do for fitness? So, it's a session that we take you through, and it's very bespoke. So that we help you gain a big understanding or a greater understanding of why is it that you're investing in properties. Because for a lot of people, let's be really open, Andrew, for a lot of people, like you said, and property is not like the most exciting thing. It's for a lot of people, it's a means to an end. It's an investment. And throughout that journey, you're going to have ups and downs. You're going to take bad, good, ugly with it. But what I find really helps sustain, I've got a client at the moment. She's nearly on her 4th property, and she only started with me 3 years ago. And as you know, what's happened in the last couple of months with COVID, I keep having to remind her, you just got to remember why you're doing this. And that's enough to inspire her and motivate her to continue on with the journey despite the ups and downs. Because property investment is a long-term journey. You're not going to make money if you put money in and you pull out in short periods of time. You have to hold for a long period of time. So too many people pull out too quickly. They don't have sustainability to go through with the entire process. Similar to the gym, right? A lot of people get started in the beginning of the year. They say, yeah, this is what I want to do, but they don't have a mentor in that case, or a strategist or a personal trainer to help them to make sure that they're consistently satisfying those goals along the way. So that's what we do with you, but it does begin with the end in mind. And that's a very important question to ask. We can't help you if you don't know what your big rocks are. What are your big priorities? What are things that you'd love to achieve in your lifetime as a lifestyle goal? And we utilize property as an investment vehicle to help you build a nest egg of properties that will generate you, I suppose, that sort of passive income, and when it turns over to become passive income in due course. So that's why it's important to understand what your rocks are, in case you're wondering what are some big rocks.
And just to echo that, for some people, it doesn't necessarily have to be all about yourself. And you notice I've got a picture down there that I wanted to share, and I'm very happy to share actually one of my big rocks in the jar, because I'm actually very excited because I'm about to realize that big rock in the jar. So my future mother-in-law, so she's I think she's 73 now, living in an apartment in Maryland on level 3. At 73, she's got a bit of arthritis in her knee, and honestly, it's heartbreaking watching her struggle to go up and down the stairs. And honestly, I'm just blessed. I have a property that's I purchased as investment that's settling next month, I believe. And I went and inspected it the other day and sent her through some photos. She's going to be able to move in there, and honestly, that's going to change her life. And that's just a big reminder about why I've gone through the struggles that I've gone through in order to build this portfolio, to be able to have the flexibility to be able to do nice things like that, and know that it's not going to impact me too much or make me struggle too much. So that's just a blessing. But once, and just sharing a little bit of our process, once we've gone through the goal setting side of things, and actually attach some numbers to it. From there, we can start to work a little bit backwards. So let's say someone comes in and says, hey, we want to, as a couple, we want to earn $100,000 a year in passive income, and that's going to allow us to achieve all of our big rocks in our jar. Next question that we would ask is, well, how soon do we need to achieve this? And the answer to that's going to be everyone. Like in most things, investing, the younger that you start, the easier it is. But everything may be possible. So in this scenario, we've said, okay, well, we want to achieve this in 15 years. The next thing that we think about is we actually shifted away from the number of $100,000, because to be honest, we don't care about having $100,000. We want $100,000 of spending power in 15 years' time. So this means that we need to adjust for inflation. So the next question that we ask, and this is really a pivotal thing for me when I think about property. I said in a previous session that property to me is really about building up my net equity. At some stage that we can check, that's basically everything that I own less everything that I owe to the bank. And basically at some stage we can convert that into getting some sort of cash flow return or positive cash flow return, whether that's in property or another vehicle. But it's interesting to know, in order to achieve $100,000 worth of passive income, assuming a 5% return on our equity, which I think is fairly reasonable or palatable to most people, we would need $3.1 million worth of net equity outside our family home in 15 years to achieve that. Or the other way to think about it, if we don't invest in property, we don't invest anywhere else, we would need to save $207,000, $728.99 every year after tax for the next 15 years every year. I don't know too many people that can do that. So when I was thinking about this, I went, my goodness, how am I going to be able to achieve this? Is this even possible? And many of you might be even thinking the same. And the answer to, I guess, building a plan towards achieving it's a little bit beyond what we want to talk about or what we have time for to talk about tonight. But I wanted to share you an example that was really an aha moment for me in terms of driving me to go, hey, this may actually be possible, and convince me that it was. And when I actually shared this plan with my parents, they thought I was crazy. They didn't really get it. They came from very much an older school mindset. You buy something, you pay it off, debt is bad. And I'm going to share with you tonight the exact example that I used with them in order to explain why I was setting out on this journey in order to achieve this big, audacious goal that I set for myself. So this is a story about leverage. So I said to them, okay, let's take two people here. Let's pretend person one's you, mum and dad. I'll tell it in that context. Let's say they go out and buy an investment property for $1 million. And mum and dad, because you are a little bit further along, obviously, in your journey than me, you have the ability to go out and pay cash. You don't borrow any money from the bank. And let's say because you're a little bit further along in your property investment journey, you pick a really good property that goes up 7% or 7% capital gains in its first year. So you make $70,000. And on top of this, because this property is such a good property, people are literally queuing up to rent it. So you're getting a 6% yield or $60,000 a year in rent coming in. Now, in this simple example, we're going to forget about some of the other property costs because this is not designed to be a realistic example. But they make $130,000 in their first year, $70,000 capital gains and $60,000 in rent. So on the surface, a pretty good investment. So I come along. Now I said to them, Mum and Dad, I don't have as much money as you. So I have to, I might be able to, in this example, put down a 20% deposit on my $1 million property. And because I'm not so far along in my investment journey, I don't pick quite as good of a property as what you selected. So let's say I get a 5.5% capital gain or a $55,000 capital gain. And because it's not such a good property as what Mum and Dad selected, I get a 4.5% yield or $45,000 a year. And on top of this, I had to go and borrow $800,000 from the bank in order to buy this property. So let's say I pay a 5% interest rate just to keep the numbers nice and simple. Cost me $40,000 a year in interest in order to hold on to this property. So after year one, I make a profit of $60,000. And I said to them, which person would you like to be, or would you rather be? Would you rather be you, make $130,000, or would you rather be me, making $60,000?
Hmm.
Most of them, and most people, and including my parents, would say, "Hey, I'd rather make $130,000 rather than $60,000." But what they're forgetting in this equation is basically leverage or cash-on-cash returns. If you think about it, how much did Mum and Dad have to invest in order to make their $130,000? They had to invest their $1 million. So that worked out to be a return on investment of about 13%. I only invested $200,000 in order to make my $60,000, which is a return on investment of 30%. And this is, keep in mind, I've got a lower capital gain, a lower rental yield. I'm still paying my interest bill. And once I unlocked this secret of leverage, this enabled me to feel confident towards embarking and continue on a journey towards achieving my big audacious goals that I set out for myself in the beginning. So that's my example I wanted to share. Anything to add, Colin?
Thank you very much, Andrew. That's a big aha moment for me as well. I mean, most people don't realize that return on investment, it's an opportunity cost as well. It's very funny you mentioned that. I had a client today that spoke to me, and she said, look, my parents are from overseas, and they're willing to help me to start on my property investment journey. She started university here, and now she's working in the construction industry. She says, Colin, I want to build my portfolio. And right now, my parents are quite well off. The parents overseas are quite well off. They're happy to invest quite a lot of money with her. And she asked me, Colin, should I pay cash for the property, or do you think I should borrow from the banks or lenders to build my portfolio? So without going into too much detail, I said, how much are your parents lending you? And it's enough to buy a property in Sydney, let's put it that way. So I said, you can buy cash, and buy one property, or you can split it up if you can afford to borrow the money. Obviously, you still need to go and see if you can check and get your responsibility. You can't just say, I want to borrow money. You've got to make sure that you can borrow the money. But the big aha moment for her was saying, well, that's interesting. So you're saying that I can actually leverage and borrow the money, which is good, Dan. I think you spoke about in the last time, because you're building your portfolio. And I think, just going back to your point, the sooner you build your portfolio, the sooner you're able to sit on it for the long term. Because historically, yes, you have ups and downs. And to be quite frank, I don't know what COVID is going to do. But in the long term, for the last 40 years, property has doubled every 10 years. I'm not saying you will do that, but the sooner you buy, the sooner you can sit on it and wait 10, 15 years. But I'd be pretty happy if you have two properties that you wait that doubles in 15 years, than to have one property fully paid out that doubles in 15 years. So you just look at the maths. I think knowing your numbers and being able to leverage on that really does help you. So I'm sure you have a lot. Sorry.
Oh, I was just about to add to that and say, I don't remember ever getting a memo when the property market had bottomed out telling me that it was the perfect time to buy.
That's right. So you'll never know the good time. I think, as long as you have this mindset that you're buying it and holding it for the long term, I mean, obviously you do your best to make sure that you're buying a property in well-researched areas. And this is why it's important to get a mentor and a strategist to walk with you at the very least. We're property investors. We're certainly in the 0.32% of the population that owns 4 or more properties. So it's very important to be someone who have achieved the results that you want to achieve. Just like when I go get a personal trainer, I'm not going to get a personal trainer who's not as fit, So it's important to find someone who's got the results. Now, I'd love to give you the opportunity to have a free 45-minute strategy session with us. It's complimentary. It gives us an opportunity to really understand where your point A is, just to get an idea on where your starting point is. And one of the things I really want to understand is to help you really, figure out what your big rocks are. Why are you doing this? What are the things and the goals that's really going to keep you on track? What's your why? What's going to drive you to continue on this journey and utilizing properties as a means to help build your wealth and to build a better future for yourself and, like for Andrew, for his family. So visit our website, www.inspirerealty.com, and you can click on the Get Started link and request for a free 45-minute chat and consultation. And certainly more than happy to answer any questions that you may have as well.
Awesome. Thanks very much. Have a good evening, everybody. We've gone a little bit over, but that's okay.
Thank you, Andrew. That was great.
Good night.
Good night.